Good morning and welcome to Equity Story Trade Watch, Wednesday, the 7th of December. I'm here with Claude, just the two of us, two fundamental analysts looking at some stuff. Before I go on, Claude, just quickly go through the disclaimer, of course, in front of you. Everything we talk about is general advice only, so we're just looking at the underlying story and fundamentals and technicals. Now, welcome, Claude, first of all. And it's been pretty, I suppose, not a great start to the week with the US markets. And that's on the back of, I think, the markets, again, thinking that the interest rates are going to keep going up because the actual numbers out of the US are not as good as people hoped for. So, some of these key figures that are coming out, indicators, are not conducive to thinking that there's going to be an easing of interest rate rises. So we've probably come up with, and I think we talked about it yesterday on the charting when we had the ATA yesterday, Claude, where with Dave talking that we've had a good run, we had a good response from the market, but it's looking a little bit tight. It might push back a little bit, maybe over the next month, and maybe early next year we'll have again something more to cheer about. But for the moment, maybe it's going to be a little bit a lull period. So we just got to adjust to that for the time being. Saying that, we've got a couple of 2 or 3 stories to talk about today for you. That has been very, very actually quiet today, and I'll switch the screen on in a sec for you so you guys can see what we're looking at. But really, company news-wise, December is normally traditionally very, very quiet anyway, coming up with Christmas and so on. The AGM season is really pretty much over. Maybe there's a few laggards left behind. The only one I saw this morning, which I will mention, is Mika, one that we actually follow, and we've got some stock in. So they come up with some more drilling results. They weren't fantastic. They were really pretty average, to be honest. But at least from the average point of view, there is still smoke. So they drilled outside of the resource at Turnberry envelope that they've obviously working on. And there's still some gold in there. It's not high grade. It's actually quite low grade, but there is smoke. So they're going to be chasing that. They're going to be, further drilling into this to see if there's any other interesting development in that spot. So we just got to wait. We're going to be patient. And, this is probably the only little small gold stock that we're playing for the moment, apart from some trends that are looking okay. Gold, just looking at gold, because that's obviously quite important to playing these sort of gold plays. There hasn't a great start of the week either, to be honest. So it was over $1,800 late last week. It had a heavy fall on the Monday after that, of course, the US markets started to tank a bit. It's recovering slightly, so it's back to 1770, so just about $30 below that $1,800. So it's still holding on quite well. So you'd expect at least the gold players to behave okay, maybe for the rest of the week. But it wasn't a great start to the week for the gold plays. So we just got to be wary that they're going to be quite volatile. All right. Claude, I'm going to give the floor to you now, and I know you want to talk about a couple of stocks.
Well, maybe we could start with early pay. Thanks, Peter, for that. Maybe I was thinking we could start with early pay. Like, I know that I would highly be surprised if any Equity Story members are along this one at the moment. But it's one that I did previously own, and I just thought there was a little useful story in there, EPY as its ticker.
Yep.
Just because back in September, so early pay does invoice financing. It makes its money by basically lending money to other companies. And that can make it a bit of a risky business model, especially in a downtown. Now, it's very cheap when I owned it in terms of the dividend. And so as a result of that, I sort of held it and harvested some dividends. But then what happened in September is that the CEO and managing director changed. And that for me is really a sign to basically the default position is, the CEO's gone in the lending business, time to get out. I make exceptions to that rule. Half the time, the exceptions turn out poorly anyway. So it is a default rule for me. When the CEO changes, really, you got to think about, are you going to sell now? I did sell. And then sure enough, today, their largest secured creditor is filed for voluntary administration, which maybe will be fine for early pay. But either way, you've seen the share price drop from like 45 cents down to 32 cents as we're talking right now. So look, perhaps a bit of a cautionary tale there, but that one out in the news today, that's a mover today. Look, is this a decent business? It's probably an all right business, but is there a good price to pay for this business? I believe there probably is a good price to pay for it, but you don't want to hold when the bad news coming out. You don't want to hold in a bad part of the cycle. And this is an example of how this is the reason the share price moved down. Even if they get all the money that they're owed by this company, which they may well do, and they think they will, it just shows how in the business of lending, if you're in a down economic cycle, when customers start blowing up, it becomes your problem. So that's why it's probably the wrong part of the cycle for me to jump in on this one.
Yeah, look, I just to add a couple of things to this, and it's funny, because obviously the charts are pretty terrible, and you've got to get out of this if you're in this.
Yeah.
But absolutely, you're right. I mean, the cycles are quite important to buying stocks, right? In a good economic cycle, these stocks are probably going to go quite well. When things are, maybe not so good, you got to recognize that some stories it's best to be away from these stories and find something else to play with. And I remember, I think there's a couple of other companies in this space. I think Silverchef was one, and there was another one roughly similar doing the financing and so on. That again, good times, it looked incredible. You think, my God, this is great. Looks fantastic. I should be buying this. But then things turn, and you forgot about that during bad times, they actually go quite badly. So you tend to maybe fall for the trap of, this is cheap, this looks great. And when I go back again here to show you guys what the financials look like, this is a value trap. So you're looking at 8.7 on PEs, like you said, looks cheap and a great dividend, but it possibly is a value trap where you think to yourself, should I be buying this? But if you look deeper under the bonnet, you're probably thinking, nah, this is not the right place, not the right time to buy this right now.
Correct.
All right. So what's the other one that you've got for us?
Well, I thought another one to check in on, obviously, because I've talked about it a lot, would be ALC, Alcidion. Look, no huge news there, nothing thesis changing. We did go ahead and have the AGM really recently. The CEO, really took the time to go through and try and show people how the Maya position, the Maya Flow software products are designed to help, doctors know what to do, help the nursing staff know what to do, keep people moving through the hospital, free up beds where possible, make sure people have had the test, make sure a doctor has looked at the test that the people have had, et cetera, et cetera. So just a nice little product demonstration there. But then, they said, oh, look, we're still on track for free cash flow, for cash flow break even and EBITDA profitability. And that was in the AGM. Then the day after the AGM, they actually announced a nice little win as well. So that's important, because in the AGM, they didn't include the win that they announced then, like the day after. So that is a positive there. And then the other real positive out of the announcement, which was basically a small win, initial contract value of 2.8 million over 3 years. Okay, not a big deal. However, a possible contract of 13.8 million if all the options are exercised for 4 years. So not only can they go and extend the length of this contract with the University Hospital Southampton NHS Foundation Trust, but also they can sell in extra new products if they get lucky and if they can make the case. And on top of that, this is a teaching hospital. Oh, okay, it's not the most famous hospital in England, but the teaching hospitals are good. You want the teaching hospitals because that is basically, they're more the leaders. They have the people who are teaching the young people coming up. It's very useful if they're getting used to those software. But more importantly, it's these teaching hospitals that tend to be more prestigious. And I don't know if this one is, by the way, but they tend to be overall more prestigious in the medical profession, in the healthcare administration profession. Therefore, where the teaching hospitals go, it's quite likely others will follow. So good news there from Alcidion, which obviously I do hold shares in. That's my little update for them.
Yeah, look, I agree with everything you said, because we always also hold this in our fund, and I've got a very positive opinion of ALC. And just a couple of things with Alcidion. And I love from the fact that it solves a very, very important problem. And I think I was reading a statistic somewhere, is that the second number cause of death in hospitals is actually mistakes, right? Instead of actual the underlying illnesses or whatever. It's actually mistakes made or misread, or, you know, all those little things that come into running a hospital contribute to the death of a patient. So if they can have a little part of that, of solving or at least curbing that unnecessary issues and problems, I like that, right? So it appeals to me from the fact that it is a very simple thing that can be fixed, because it can be, hospitals and all these places are very complex, right? So there's a lot of legacy type stuff, and if they can somehow bring all that together and assist nurses, doctors, whatever, to become better, efficient, less mistakes, I'm all for it. So for me, that's the way I like it. But I also like the fact that, you know, they are making some waves in the UK. I mean, the UK is quite a nice market to be in. So for me, that's also a big positive. I think it's fairly sticky as well. When they sort of, once they get in, it's normally, you know, you've got a contract for a number of years, but obviously if you prove yourself, you don't normally going to lose a contract unless someone else comes in with something extraordinary, right? So that for me adds up a lot to liking the story as a whole. And I love the fact, like you said, you know, the little small contracts that keep adding up, they keep putting up nice announcements, and, you know, the chart's starting to look a bit better. It just needs to probably do a little bit more, and really we're going to see the traders return to this as well. So all up, I'm liking Alcidion, you know, a lot. It's a story that hopefully will deliver for us over a longer period of time. Yeah, it's definitely one of those. It's got that feel for me, Claude, that if they can play the cards right, they could go a long way, and the share price can look very, very good in the next 2 or 3 years.
Thanks, Peter. Do you want to kick us off with the next one, or you want me to go?
Look, I'll go for the next one. I'll give you a little break. So I'll go with the next one. And I actually want to talk about PEXA, right? Because I know we had this one on our top 10. This is a top 10 that I came up with when I came back from Europe. And me and, you know, Dave, we decided to go, let's when we started seeing the market starting to go up, we thought, okay, let's give everyone some sort of ideas to maybe nibble on over the next few months. So PEXA was in my smaller type companies. When I say smaller, it's not the top 50 or top 100. Let's, you know, talk about the next load. So maybe there's the medium cap companies, and PEXA was part of the top 10 in there. And the reason why I like it, and this is one of the few tech stocks on the ASX is actually profitable. While it's not cheap, of course, you know, I don't think there is a cheap tech stock on the market, unless, correct me if I'm wrong there, but, you know, there is not much value in the tech stocks. But from the fact that they're obviously spending money to expand and grow their business and still profitable, you got to give them some kudos for that. And I love the fact that they're dominating the market. So I think they've got a market share of about 80 or 90% odd in conveyancing in Australia, and they're moving into the UK, and they seem to be starting to gain some traction. But the real key for me here, so I like the company as a whole, what they're doing, you know, digitizing that process of buying a house or part of buying a house or real estate. But the fact that I like about it is they're listed much higher than previously. So let me just put the chart on so you can have a quick look. And you are buying this really probably arguably at cyclical lows. And when I like to buy stories, just fundamentally, right, over the long term, if I can pick something up at a decent price that I think it's on a cyclical low, I think I'm in a much better position than buying something, you know, at the top of the market, thinking that it's going to go up, and then you're going to, you know, maybe have a 6 month, yes, and then for the next year or so. So for me, PEXA, let's have a look at that now. I'll put that in. It doesn't look great on the chart, like I said, but I like it a lot about it. You know, I think it's very, very well run. I think also Link owns about 50% of it, which is not ideal, but I think they talked about selling about 10 million shares odds in the company, which will give it a bit more liquidity as well. So this is PEXA, as you can see, it's not great. There's a bit of support, maybe. When I say support, I mean, it's obviously not the way we like to trade things, but at least there's a bit of support, maybe around the $13. So if you are looking to nibble on this, and we talked about it yesterday, cyclical lows potentially, right? Maybe we've got another 6 months, so maybe stagger that buying opportunities or nibbling opportunities, but it should relatively hold that 13, hopefully over the next 6 months. And hopefully with time, like we said, you know, it's going to recover, real estate will pick up, buyers will return, this is profitable, like I said, so it shouldn't take too much. And it could turn into a nice company, right? It may be like a real estate.com.au. I mean, God knows, but at least it dominates the market. So I like companies that have got a number one position in certain markets. This does have that. And really, it probably can from here. If anyone tries to usurp it in its space, it probably block it some way, either take it out, whatever, right? So this is for me one to definitely have a look at, because it hasn't been performing in our top 10. But like I said, it is a pretty good story to have a think about.
A potential future blue chip. So
yeah.
So I like that about it. Sort of quasi monopoly kind of position, but obviously market is pricing in some growth overseas, so not a guaranteed win at this point.
Definitely not. You're definitely taking some risk on, but like I said, if I'm gonna be taking the risk on, I want a company that at least ticks some other boxes. You know, your profitability, dominating market, and so on.
Now, I am slightly running tight on time because I've got a next meeting soon, but I did have one that literally just came up into my head right now, Peter, which I thought it'd be great to get your opinion on. CHL, Camplify. And I just thought I'd ask you about it just because it's one that I'm in an iron about. I've owned it before, don't own it now, but I like the story. These guys are basically, you know, a website you can go to either lend out your excess camper van or actually borrow someone else's. Now I've been out of it for a while now, but I'm just wondering, you know, when you reckon might be the time to start having a little nibble at this? Like, if given that I'm kind of interested in following the story long term, I think there's just a chance that it would actually be a little bit like a really good quality business in the future.
Yeah, look, I don't mind it either, you know, and I have been following it for a little time as well. There's probably two things for me personally where I'd go, I'm just going to give it a little bit more time. First of all, is the acquisition that they made in Germany, right? So I just wanted to see how that flows through. And maybe right now, when you look at the charts, when you're just looking at what's happening right now, you know, with Australia and maybe Europe, and I know, like I said to you just before, I like to buy things cyclically when it's low. So maybe you can make an argument, maybe this is the right time to look at this. But I'm going to give it to at least February. So just give it to February to see what the report's like, that financial report, see what the growth is like, see what the cash flows are like, see how that acquisition is going in the Germany, and then maybe make a better judgment. Is it time to buy, to have a little nibble on this? Because like I said, I mean, I don't mind this company. You know, I think it's in a good little niche position, and they can possibly dominate its little spots, little niche. And it's a great again, you know, for me. So I like it, but just maybe for me, wait till February just to see how things turn out.
Cool, thanks for that.
All right. On that note, since we are done pretty much, covered the things that we wanted to do, and there's no announcement.
Not so much news today, not a lot.
Yeah, we're gonna call it quits. So thank you again for your time, Claude. Thanks again, everyone, for
Peter,
joining us and listening to us, and we'll see you again tomorrow.
Perfect timing for me, mate. Have a good day, everybody.
Cheers. Bye.